Good afternoon. Good afternoon. Where is everybody? Was it hard to get in today? I'm like thinking I started the wrong meeting or something. Looks like people are starting to come now. Okay. Hi, Perry. Good to see you. Good to see you. We're going to give it a couple of minutes as people are popping in. Make sure they get situated. Make sure they uh videos turned on, etc. Friday, we made it. Congratulations. I hope the week went well. Uh, nice weather where I am. 45 degrees and sunny. Feel like spring's trying to come my way. Can you guys see my screen? Let me know. It should be turned on. Yeah, okay. All right, we'll give it another minute. I would expect others to join us, but we're going to go ahead now and get started. Welcome out to the Market Watch Group Weekly Market Wrap. I'm Scott. Last 45 minutes of the market day and the market week. As always, here are our disclaimers. Don't forget, this is educational and illustrative only. No recommendations to buy or sell. We are not advisors. Yada, yada, yada. Here's the agenda. What happened today? We'll look at today's market analysis. We're going to look at today relative to our posture and what's happened this week. And this is one that ideally you're coming, maybe you're doing this analysis yourself 30 to 40 minutes before we come on and we meet together. Why? Because I think that this helps inform our decisions, where you may have some trades that you're like, oh, do I take profits? If so, how much? Do I carry it? What do I do with my stop? And there are times where I say, wow, you know what? My posture looks like it's gonna ease up. Things are looking and that might cause me to take a little extra profit and right, or sell something if I was thinking, do I sell or do I hold? Versus other times where we say, man, our posture is going to improve. I think I'm going to hold on. This market's looking fine. So I think that this process is helpful, but make sure you give yourself enough time that what you see relative from this week and today and how we score it and how we think it's going to be representative of market conditions come Sunday, that you now help to inform your mindset for trades that are being carried over the weekend. What are you going to carry? How much? What are we looking for next week? What's coming out on the economic calendar? What information is the market prioritizing as it makes decisions? We'll look at our trading list and see a lot of things. Remember, we said we thought that NVIDIA would be a catalyst. It was. I think you'll see that that's the kind of day that the alerts, and again, the last piece of the puzzle, and I know I keep saying this, is the SMS. So you'll have the ability to sign up for alerts via text. They'll come via text and via Discord, right? But the alerts are going to give you a trigger point so that when you have the alert the next day, he basically says this order is valid in this range, and you'll see that type of a scenario where you're starting the range a little above the previous day's high. So you're saying the buyers now are coming in strong enough that we're ready to start. We're ready to enter. And we'll trigger an automatic. When that order triggers, you can trigger an automatic stop loss, even a partial automatic target. The target you can do an OCO, one cancels other. And on the upside, you can have a target for half of the trade or a third of the trade. And on the downside, you can have a stop loss for the entire trade. If you're not exploring automation in your orders, you should be, because it's super helpful in managing what's going on. And you can have all of this just kind of set up, and then you manage and make adjustments to the orders if necessary. But we definitely want to be thinking about that. What we look for next week, we'll look at the shopping list, and then this is it. We are wrapping up our goals. Hopefully you spent some time defining a few goals, and now next week we start over. We start at the beginning, section 1, personal information. You should now have 2 months of more trading experience. You have a pass at the trading plan. Now you're ready for the next pass. That plan should be getting better and better. Don't get complacent with that. All I need is an hour, 1 hour. Give me 1 hour a week spread across no more than three 20-minute sessions, 2 30-minute sessions, 1 hour session, where you focus on the trading plan. Oh, I promise you'll be happy with the results. Let's dive in. What's going on? So here's our market. We gapped up, but we could not hold. We gapped up, and you can see we established our range, and it came down. Why do we look at the opening range? You can see right here is when it broke the opening range. It held all the way across, and then it broke. And then what? Immediately fell that same distance. Tried to come back, having a hard time doing it. Okay. Does that mean it's over? The buyers are done and the sellers are coming in? Absolutely not. That is not at all how I look at this. For any bullish trade that I'm in, if you're in bullish trades, you should not be like, oh, it's a red candle. What are we going to do? It's a red candle. So what? This was a red candle right here. Then what? And then it paused, and then it went up 4 more days and got all the way to here. Don't let this. Here's a red candle. Then it went up 4 more days. Red candles are just that. It gapped up. It didn't hold. It's still higher today than it was yesterday. And yesterday was a new high. What? Yeah. Okay. My short-term score is absolutely going to improve. Actually, maybe not, because I was thinking new high, but I'm no longer looking that way. I'm looking at the trend. Here's what I will say. The short-term trend held. It held. Let's get our posture up. I'm getting a little ahead of myself in my excitement. Here we are. Last week, we scored long-term 1.25. Is that still how we see the long-term? Let's pop in. I'm going to say yes. Although, look at this. This thing looks like it's actually trying to break out even again. It's making an argument. It's absolutely making an argument for now. This is, I should change the color of this. Let's make this pink. And this is its corresponding. We gotta stay organized here. There we go. Now you'll notice that is the accelerated trend, and it's popping above that. So is that worth 1/4 of a point? We will decide that. That's a possibility right there. So first thing we see is the possibility of scoring this even a little bit more favorably on the long-term score. The short-term score, we're just in the same trend that we've been in, but it held. And I absolutely think we have the ability to get up into this area by the end of the month in a few more days. So yeah, feeling bullish. That looks fine. I think we've scored it well. That looks like it's on point, and leave that as is. Volume, we got close, but we did not get. We said in order for us to maintain our volume score. Yeah, so these two are good. I think this might get a little better and like I said, this might drop, but these are holding up. In order for this to stay at a 0.5, we would need a new above average volume buying day. And we got close, but we were only about 2% above average. We needed 5%. That's our threshold. 5% above average. So if you look at what's happened in this portion of our analysis, we had a couple of bullish days that have dropped. Now we have bearish, bullish, bullish, bearish. That's a tie. Tie goes to the buyers. So I'm going to give it a 0.25. But if I wanted it to stay at a 0.5, This needed to be an above average volume day, and it got so close, but it didn't do it. We score what we see. Didn't happen. I'm this is going to drop to a 0.25. Still positive. Still looks better than not, but it is easing a little bit. Major market, the core factor of major market that we're keeping our eye on right now, remember, is the small cap participation. We continue to monitor the Fed and the likelihood of it moving into a dovishness. We've adjusted, right? It's priced in. What's priced in? It's the lowest probability we've seen. We're at 2% for March. There's not even a whiff of a possibility. If you look at May, where I've been sitting, it's at 4-1 against. 4-1 against now for May. If you look at June, it's barely 1.5 to 1. That's the first place that we have a favorable probability that the Fed is going to cut rates. June, first time. Okay. Who does that impact the most? Small caps. But is there still interest in small caps? Last time we were looking to see if it holds the 50. It held the 50. This time it didn't even pull back to the 50. Already looks like it's starting to bounce. This might be enough to convince us to move that major market score back up. Did we ever get to a 1? We never did. Move it up to the 1. To a 1. Okay, that's a possibility. So we have one that's definitely going to drop. We have two that are possibly going to increase. Sector rotation can't increase. It's as high as it gets, but it's going to stay that way. Everything's looking strong still. We're seeing movement in financials, movement in industrials, movement in technology after NVIDIA, right? So, yeah. The VIX. Okay. So the VIX is interesting. The VIX is interesting. What has happened? Oh, and now today you can see it was holding on to this volatility, right? But today, finally, now I was actually still at the beginning of today thinking we're in a dangerous place potentially, but we have now had a lower high. That's going to get us 1/4 point. And we're taking out this low, which means what? Which means I'm closed the rest of my hedges. Closed the rest. Right? I would say I took a good early profit over in this area on one. The other one loss, I would say net loss for the whole thing. It was a tough one, right? Because we saw escalation and then it looked like it was calming down. And all of a sudden it jumped back up again, but it looks like it's coming down. We're going to see, hopefully we get a little bit of follow through here. But what we do know is this, it's not setting up for another higher low. Great. Fantastic. So yeah, I feel pretty good. I feel pretty good about the market being able to have a little bit more follow through over the next couple of days. So am I willing to hold trades into next week? Yeah. Talk to me out there. Are you trading? Are you in bullish trades? Are you holding those bullish trades? Tell me where you sit. But overall, I would say there's a chance we get at least 1/4 point, possibly 1/2 point on the VIX. I think we're going to see it jump. Maybe not back to a 7, but I do think we'll get maybe 1/2 point back. Maybe this jumps back to a 6.75. As long as we're moving around between 6 and 7, great. That's fine. I have no problem with that. And it looks like this is staying fairly strong for us. So that's what I think we're going to see there. If we look at the day today, here is our heat map. Now you can see AMD struggling. Apple and Microsoft are a little iffy. So everyone who says, oh, the big 7 or whatever, Tesla's down, Amazon's flat, Google's flat, Meta's down. The markets overall look pretty good, though. So Okay. Let's keep looking through. And the next thing on the list today, let's hit the watch list. Starting with Apple. You can see Apple gave an early signal, but it is at this point looking very questionable with this bearish engulfing candle pattern. The stochastics is still turned up, but the candle is pointing down, and then the volume is very lackluster. So this is tough. This is tough. If you look at the Heiken Ashi, this would not yet trigger. If you were using the Heiken Ashi to adjust your stop, you'd probably have your stop somewhere just a little south of 182. I don't like stops at round numbers. I'd probably have it around 181, let's say 181.90-ish. But the question is, do I want to carry this trade through the weekend? Because if you're long an option, then come Monday, you've lost 3 days of time. So the question is there enough here for you to say that? Or do you think to yourself, I don't like the way that this looks, and I'm going to take my loss, try to keep it small, and then move on? Okay. Yeah, we're going to see some interesting ones. AIG, where would the trade have been based on entering on the break of previous highs? It would be right in this range here, which would have triggered in the morning. If you enter at that point, you're going to usually trigger an initial stop just below the lows. There may be a target at new highs somewhere up in here. There may be a take profit somewhere in here. That would be a fully developed trade. So that's the kind of thing that the alerts are going to look for, where it says here is a entry zone, here's a stop zone, here's an initial profit level, here's a final take profit, swing profit level, and then you have the ability to decide, how do I want to trade this? But my suggestion would definitely be automation on the entry and having the entry trigger OCO orders, that possibly even 2 OCO orders. You might think, why would I have 2 OCO orders? Well, I might have, let's say I have 3 contracts. I can have 1 contract sell here, and then I need to have a stop loss on that, and those 2 are connected via an OCO. Then I'm going to have 2 contracts up here at my ultimate target, and I need to have those 2 with the same. So the stops between the 2 would be the same, right? But these would be connected by an OCO order. What does that mean? That means that if this moves up and it hits the first one, this whole thing cancels. And now I have this. And if it got to that point, what would I do? I would come in, take that stop loss, and move it up so that the stop loss is now here. And now I have, right? Do you see how we can really automate our trade management strategies to just sort of shepherd our trades to their ultimate targets? Ease the stress along the way by having take profit zones and levels where we tighten stops and move it on up. That's what we're really trying to accomplish, if possible, with our trading. Let me know if you have any questions about that. AMD. I would have said that was way too late to enter on this one. So when we do our entries, remember, it's going to have a entry target and then a, where is it no longer valid place. So that if it gaps, we're like, I don't want to get in. I don't have the same reward to risk ratio. If I enter up here and my stop loss is down here, that's very hard to get. Where's my target? Way up here somewhere? That's very hard, right? So we don't want it if it's going to gap above us. Our zones are going to be somewhere through here. If we can't get it in there, we can't get it. It's not good enough. Amazon, possibly something you might hold through. It popped up. If you got in on time, if you didn't get in till here, it's probably too late. AXP, I think AXP is viable. Boeing, you can see there's nothing there yet. BLDR, reported earnings. I'm still waiting. I still think this thing, you can see where we are. We're kind of sliding down. If this thing pulls back as this is moving up, I think we may have a nice potential trade developing out in this situation. So look, if we have a watch list of 50, 60 stocks, if I have 10 or 12 that at any given time are maybe 10 or 12 days out, and they're always cycling, they're always coming closer. So we'll just be patient. No need to force. BX. Oh, BX. BX looked like it was trying to give a signal here, but it never really turned, right? And now what? Now you're still waiting. We still have plenty of opportunity for this thing to come down and give a higher low opportunity, but it's not yet. And I'm still bullish on financials, so still looking for it. Ooh, this is a tough one. What am I doing here? I'm still in because look where it is. Still on its line, but where is it? At or near resistance, overbought and pinching, starting to break below. Is this time to sell it all? No. No, because look, we've crossed below around the midpoint a couple of times. I told you I've seen this happen. But do I always tend to? I've got profit. It's the weekend. Is this a good time to take somewhere between maybe 20 and 33% off? A fifth, a quarter, a third, somewhere in there? Yeah. Book some gains. Move the stop up a little bit. Let's see what this looks like if we move it now to a Heiken Ashi candle. I can move my stop up into this area here, 55, 55, 25. Now if it drops, remember, entry's back here around 54. Now if it pulls back, we're still booking profit on the stop. Plus, we already booked a good one today. But if it keeps going and it accelerates like it has the last two times, if it all of a sudden accelerates, we still have a good piece. And this is definitely the kind of market where it could. Trade management, right? It's really important that we come into the weekend with a good sense of what we're going to carry, why, how we're going to manage it. Very deliberate in that process. Caterpillar, that's a baby, right? I mean, and if you wanted to, you could think about a tighter stop based on the Heiken Ashis coming in here. I still think there's valid trades that could be taken. Capital One, not one of them. Still sideways. Oil seems to be pausing. That's good. Anybody in this one? Gave a signal. Ooh, it paused a little bit, but still going. Remember, we've seen it pause a little bit and keep going. CrowdStrike. I said when it dropped down here, even though it sat on the 50, I'm not looking for this until I see a higher low. But this is enough to entice me. It closed this gap. Now what? Well, now if I see it kind of pause and pull back, there may be a trade. Problem is it has its own earnings. So I don't know. I'm not sure that there's much we'll be able to do with this, but watch. But hey, let's keep our eye on it. CSX. This was one we were really paying close attention to. Gave a great opportunity to trade into it here. Would I carry this one through? Absolutely. Look just like this. It has plenty more of opportunity to go. You can see it's probably only, I think it could be only halfway up. DAL, not for me yet. Not for me yet. So no home builders, no airlines. I don't see it. DIA looks strong. Ford is setting up. Ford is one that I would be looking for. Where will I, like maybe on Monday, if we get the texts up, here's how it'll look. That's the trigger point. If we break the highs there. So if it looks like this, there's nothing. We don't care yet. But if it looks like this, we're in as it crosses that threshold. When it crosses that threshold, we put in a stop loss and we say, yeah, let's take a little there. And we say, you know what? Let's put a target at a place that's been hit a couple times. Maybe not quite 13. 13 could be a little greedy. Let's go a little underneath that. So we say if it gets up here, I'm going to take a profit. But I also think it could get on up here to another. You can see from here to here, we got 50 cents, maybe here to here, 50 more. So I'm going to try to carry the rest of it and see if that can happen. And now I have this trade developing where I'm maybe getting 2-1 at the first target, 3.5, 4-1 at the second target. Great. Great. Setting up, getting ready. Market's good for it. Fastenal. Fastenal's another one that, definitely gave a trigger back here, right? We talked about it. And here it goes. And if you're in the trade, what could you do? You could manage it by tightening your stops. Ride it on up. Keep on tightening your stops, managing risk. I wouldn't take profit on this one yet. It's got blue skies, nothing ahead of it. GBTC, Bitcoin pulling back a little bit. If you like it, it could be setting up for its next trade. GE just keeps on running. Gold has popped a little. It's still a little, barely got back above its 50. Google, it's the same low. I'm not convinced quite yet. I'd love to see it get all the way back up here and then give me a higher low. Then I'll be like, all right, Google, let's play again. Home Depot continues to shock and surprise and outperform expectations. IBM, nah. Intel, nah. IWM looks okay. It's holding up. Small caps, the little engines that could. JP Morgan, I tell you what, that was sneaky. Like it was just kind of lulled and then all of a sudden took off. All right, if I get a nice pullback, I love financials right now. Definitely. Las Vegas Sands, it's a little too choppy for me. Your stochastics is turned, but this thing's already chopped up. I don't know. I don't really like the way this behaves. I think I'm actually going to bounce it. I don't like the way it moves. It's off the island. Meta gave a nice little turn if you felt like you could get the reward to risk ratio you needed. Now, how would I do that, Heiken-Ashi? If you get in here, you can't have your stop down here at 459. I've got to get it tighter than that. How do I do that? Well, here you can see even if I used this, the let me switch back. Candle. Meta. If you were all the way down here, you're at 459. That's way too far away, right? 459. But if you were getting in at this situation, if you're entering somewhere around 480, what can I do? I can get below here. That puts me around 467, 468. You're almost 10 points closer. That gives us a little more leeway to say, hey, look, it's already in the momentum stage. Already, if I was entering on a red candle or a small candle like this, I'd want to be underneath the lows, right? So back in here, I'd be under the lows. But if I'm getting in when it's already on its second candle, I don't think I need to be back here. And if I'm on the first candle, I can go with this level underneath it. We've got to control reward to risk when we're entering the trade. Microsoft would have had the same kind of a configuration. That's a tough one. It gapped up today. It's already engulfing. Yeah, I think we're just gonna have to see what happens on that. This is a maybe. This is a maybe right here. You could potentially say, hey, you know what? Let's give it a run. I could put a tight stop. If it runs, great. If it doesn't, small risk. It doesn't tend to gap down, so we should be okay with something like that. NVIDIA, I mean, it got a nice move, but it's already kind of stalling. So yeah, I would expect that it probably consolidates again. Bakar, another industrial, looks strong. It's not new though. The NASDAQ just kind of keeping that nice steady trend. Ross Stores, that was a retail. It was new to us. You can see it gave you a nice little signal here. Would have been on this red candle. If I'm entering there, where's the stop? Right underneath. And then, looking to see if you can replicate one of these past moves. One trade Perry said on Starbucks. Okay. I'm actually right at Starbucks. I like alphabetical order on my symbols. Starbucks. Okay. Love it. Look at that catch. What do we have here? What do I like? What do I like? It was in a consolidation zone. It just kind of kept staying in this I don't know what this red candle is. I initially, when I see those, think, nah, that didn't. Oh, it's earnings. So maybe it did. Maybe it gapped up all the way back down. For me, it didn't break. And then what? Then it broke the consolidation. That's point number one. Broke the consolidation. Point number two, nice higher high. It equaled this one, but it definitely took out some prior levels, some bullishness there. Now what? Now it pulls back. Does it have to hold the 50? No. What do I have here? Point number three, higher low. Nice correlation to this stochastics turning up. I'm hoping you're in this trade on day 3 or 4. Hopefully it's either you got in on this first day of the turn or early on the second one, somewhere in this range. Yeah. Now what? Well, we have a little bit of a shooting star today. We don't love that. End of 3. Love it. Love it. We tested, we got near this and we got a little scared, you can see, but the stochastic still looks pretty good. Now this is where if you had a target, you might have hit it automatically. Remember, I said I don't set my intermediate target at like a highest point. I set it at a point that's been hit multiple times. So if you did that and you automated it, you might have had something that took some profit there and then pulled back, but I'd still be carrying this through the weekend. At least some of it, right? Because look at your Heikin Ashi candles. They look great. Move your stop up, carry through, and then see, I'd say the next target's up here around 98.5, 99. I like it. How does that jive with what you were thinking? Are we on the same page? Let's go back. I'm going to keep going through my watch list. Before the market closes, let's get to everything. SMCI, it's a volatile sucker these days. Yes, love it. Okay, good. TPR, there's SPY. SPY is even rallying up a little bit. We're closing back up near the open. So we're holding on to that small gap up. I think that looks fine. TPR, I know Michael was trading this. He's not here today, but I'm hoping he just keeps on raising its stop loss. It keeps on marching forward. Love it. UNP, CSX is better, but that's moving. Industrials are still strong. That's what it tells me. The VIX closing at or near the low, breaking through the 50. We're took this out and we're back down there. That's nice little reset. We'll score that accordingly. Waste management just keeps running after earnings. Walmart, we've got a split coming up. Very exciting. Biotech. So the biotechs and healthcare have shown some resilience. But I don't think there's any setups going on in there. Same with materials. I don't love materials being strong. That just makes it more expensive to build things, right? Communication services holding up as a leader, still strong. Looks like it's possibly turning into a new signal. Energy, yeah, it did. It popped a little bit, right? It broke its 50 back in January, and now it's kind of pushing to another new high. It's not aggressive, but it's definitely climbing. Financials looks fantastic. Look at that new high. The trend looks great. Financials look great. That's why I'm willing to carry some. Anything you have industrials, I'm willing to carry that. It looks fantastic. With energy, no. With technology and communication services slowing up a little bit, it's not looking weak. It's just kind of there's a little pause. It's nice to see industrials and financials who are in that second position moving into like a, hey, we'll carry this thing. That gives this market an extra level of bullish resilience. Here's the technology. It's holding up. It's not great, but it's holding up as in a leadership. But these two you can see are still surging, and financials is still surging. Staples looks okay. Stable. Staples are stable. Utilities, what are we thinking about here? Do you see a surge that we would think has implications that are defensive? Like, oh, holy crap, look at that. Everyone's piling into utilities because they want to get in there while the getting's good. No, we don't see that. It just looks kind of sideways after coming down. Healthcare, on the other hand, looks very strong, still very bullish. And some people say, wait, is healthcare defensive? Nah, healthcare for me has it's got some chameleon type properties. It can go either way. It can blend, and since Obama, I told you there was an entire year and a half of bull market that was led by the number one group during the time was healthcare. So it can absolutely have growth characteristics, and that's the way I see it now. Here's consumer discretionary breaking to new highs. That's moving. We said we think it's back here. We said it's moving back into a leadership position. We had flagged it as concerning during this time, but then it broke its consolidation, a quick little pop, and then it's popping again. And at this point, what do we see? I see that. What do you see? It's looking better. It's looking stronger. That's another growth component of the market right there. That's everything. Do we have a few things setting up still that could possibly turn into trade signals on Monday, Tuesday? Yes. And I'm hoping we have everything set up for the SMS so that we can get going with that. SMS and Discord. I will send Discord instructions again. If you're not on it, get on it. I don't know how the SMS will go. I'm assuming we have your cell phone, but we may have to spend a little time reconciling that and making sure that we have everything. So make sure you have Discord set up and ready if you want to participate in the alerts. In the meantime, we're on our last week of trading foundations, which is basically I think on Tuesday, we're going to do a record keeping and analytical session, where we take somebody who submitted a completed trade log, 100 trades, 100 live trades, and they're willing to let me use that as a guinea pig moment to kind of talk about what could we learn from it. I think we're going to do that on Tuesday night. So that should be very interesting. It's the first time we've ever done it. So I'm excited for that. Thursday, Q&A. First Tuesday in March, options, 2 months of options. Options Foundations course kicks into gear. So if you've been thinking, hey, I'd like to learn more about options, now's your chance. Trading plan. We are here wrapping up on improvement strategies. My hope is that you have identified and defined very deeply at least 2 or 3 trading goals. So yeah, that's the hope. But at this point, we are now going to roll back up to the top. And now we are on iteration. We are on 2024 2.0. This is plan 2.0 from 2024. Next version. You'll be able to go a little deeper, add some detail, maybe switch things up a little bit. But once you have a starting point, it's a lot easier to start making edits. This is the key to everything, is this trading plan. The trading plan, the record keeping, that's where we have the ability to make improvements, to really figure out what's not working and improve it. We talked, if you missed it yesterday, we had a trading foundations on post-trade assessments. Oh, that's a big one. That's not in our spreadsheet, right? That needs its own spreadsheet. I talked about working on that as an asset for the group, where we can kind of standardize a post-trade assessment routine, where we can flag patterns and other things along those lines. Okay. Trading plan, check. Market posture, we're ready. We're still bullish. I love March and April. They're historically fantastic months. I want to be ready to make some good money. And if things turn sideways, guess what? If things turn sideways in May, guess what we'll be doing at the end of April? Talking about butterflies and iron condors and calendar spreads that allow us to make money. So if we think the market's going to go sideways in June and July, we have strategies that we can implement. There may and will be alerts that are very option specific. If the market's going sideways, I'm not going to put out directional trades as much, but I will say, hey, you know what? This is a great time for us to put on a butterfly and let it sit here and make money from time decay. This is a great time for us to put on a calendar spread and let it sit here and make money from time decay. So if you want to take advantage of those, you want to be comfortable with options. If you want to be comfortable with options, Tuesdays and Thursdays, all February and March. That's what we're going to be talking about. All right. Well, it's good to see everybody. We'll take Saturday off as usual. And we will meet on Sunday morning at 11 a.m. Eastern time to formalize our new market posture and get ready for the next week. So onward, upward, constant improvement. It's good to see everybody. Thanks for hanging out with me this hour. Enjoy the rest of your weekend. As always, happy trading.